Now, South African companies have been suffering on the markets this morning after President Jacob Zuma replaced his finance minister last night. The country's currency, the rand, is trading at a record low against the dollar, and banks are falling on fears that the country's credit rating could be downgraded. Well, among the industries badly affected by the political situation in South Africa is, of course, mining. Mining giant Anglo American is soon to undergo a radical restructuring and will soon be joining the FTSE's so-called 90% club. That's as demand for commodities continues to slow. Miners now make up the entire list of companies that have lost more than 90% of their value over the last 5 years. It's been a very difficult time for Anglo American. Well, joining me now is James Sceales. He's a mining investment consultant. James, good morning to you. I know you're South African, so I'm firstly interested in your insight into the situation in South Africa and just about the stability of the country.
Thanks. I think it might be what people consider a perfect storm, given where commodity prices are and the global commodity rout, which is obviously fundamental to the South African economy. You have that on the one side, and then you have slow growth, emerging market worries. And then, on top of it, you have this political situation going on, which causes concern from an all-round investment perspective.
You mentioned there the commodities rout. I mean, we're looking at the worst rout in 10 years for commodities stocks. Everything that's been flashing red on the markets boards tends to be related to commodities in some way, and what it tells us about global demand. Could we get a Lehman moment from commodities, do you think?
I think it depends on some of the big players. I mean, obviously we saw a few months back when Glencore, fell 30% in one day. That was a good indicator of what can happen in the industry. That they being one of the biggest miners, FTSE listed, they've got a huge debt book, roughly about 30 billion at the moment, but they've targeted as of yesterday to come down to about 18 billion. They also have what's called ready marketable inventories, which is an additional $1 billion worth of letters of credit debt, which they don't actually include on their book.
But if one of those companies failed, could it trigger the sort of global meltdown that we saw when indeed Lehman went to the wall?
I think it could.
I mean, the Bank of England has written to banks to say, I want to know what your commodities exposure is, because the Bank of England views systemic risk in commodities exposure.
It's not. I mean, the Federal Reserve did the same 6 months, even 12 months back in the States. I think it makes sense that they're worried about it, but these big companies actually have a lot of levers to delever. So, I mean, if they can cut Glencore cut its dividend, Anglo cut its dividend 2 days ago. That's just one measure they can do. They can sell a lot of assets. All these measures, they can quite quickly repair their leverage. But if there's the case where copper still remains low, it is for the next 18 months, and suddenly their cash flow is not what they predicted to be in 12 months' time, I think they're going to be in trouble. But there's a lot of private equity out there willing to take cheap assets. So I think,
so it could be some bargain hunting going on that's going to help the commodities
I think
sector.
very much so.
Okay, all right. James Sceales, good to talk to you. Thank you very much indeed.